right, there we go. We're on. So it's been fun. We had the Donald Duck give us a nice little presentation yesterday, and the market dropped based on whatever he said on Iran. And what I noticed for me was about 8 in the morning or so, market dropped, and I started watching it in this area, descending wedge. This is S&P 500 futures on the 30-minute chart. Descending wedge, the breakout, the retest. I entered the short. It didn't work, got stopped out, but seems to be on its way now. So that's interesting. These lines, put them in after the fact, let them be. But there's that descending wedge setup that I like to see. Consolidation to the breakout to the retest. It just got messy. So I'm not in this one now, but I took one little stop on this. It seems to be a basically continuation of the move down. So that's S&P, as well as the same thing. I see it here on the MNQ. Same thing, basically going down. And yeah, let's see how far it goes. I have that level there from previously. Bit of a messy zone, just yesterday, really, or 2 days ago. That's fun. I think we have the same on. Got a lot of noise there, Jacky. Coming out of there. Got a lot of noise coming out there. Anyways, we got the same thing here on the Russell. At this point, what's interesting to this, I saw the descending wedge. It didn't do a neat retest and go, so I didn't play with this one. But a little later, it started to look like an ascending wedge. So that's what I drew there, waiting for the breakout retest. Maybe there's an opportunity there, but never happened, right? This turned out to be a false breakout. That's why no entry. I mean, if you just entered while the candle was going up, then you get stopped out. That's why I don't like entering these breakouts. So once you have a good consolidation, ideally with higher lows, basically it's an ascending wedge, then you have the breakout. The retest is where you really want to get involved. So none of that happened, and on the bigger picture, really, it's just continuing down, it seems like, based on, again, the news that we had yesterday.
Yeah.
And the same on the Dow Jones.
So, I'm sorry. So you mentioned that normally you get in because you do see like irregularities, like in those, let's say, candles. I don't know how to.
The anomalies, yeah, exactly.
Anomalies, so, yeah. So what is exactly, what does that mean exactly?
Yeah, all right, I'll get to the next one. I'll show you on okay, that one here. Nice. This one is Dow Jones. So anyway, same idea. This is oil. Now, oil on the same news has been going up. See that? It jumped up, the ascending wedge right here, right? Yes. So it was around about, I think, maybe here when I started drawing it. So I drew the flat top and the higher lows, and sure enough, the breakout happened and came back, did the retest, and off it goes. And I did get involved in this one, and I'm still in it from the last, I don't know, 8 hours or something, trying to get up there. The stop was very tight, but I'll show you how it enters. So basically, once the chart looks like this, where the breakout has happened and it's gone some distance from the breakout level, then I want to see it come back later. And I want to see not just that it comes back, but it at least has a little bit of space. You don't want it to be the next candle just bouncing off right away. I want it to go and come back. You see there's a tiny little gap, at least just one candle gap, where there's room to the left effectively, right in that zone. So once it gets back in here now in this area, that's where I'm interested. And then I'll zoom into the tick chart here, the tick footprint chart that I like to use. And this is the 100 chart. I think I was using 1,000 for the entry on this one. Yeah. Let's get into this one, 1,000 tick footprint chart. So as you can see, there's that breakout that happened. We saw it on the 30-minute, has that space in between, comes and bounces off, right? And so the fun is to watch for those anomalies first. Most important thing. Anomalies are basically nothing more than the opposite has happened. So when there's more sellers, the price should go down. Very simple. When there's more buyers, the price should go up. But what if there's more sellers and the price goes up? That's an anomaly, something unusual. Yeah. So that's what I found here on this footprint chart. As the price dropped here, right into that previous breakout zone right there for the retest, it started printing these massive anomalies. Basically, this is volume delta. So many more sellers than buyers. That's why the bar is red. And there's a whole lot of bars here. This whole area has more sellers than buyers. Overall, put it together, there's all selling here. People aggressively selling, either stopping out or shorting, whatever. I don't know. The point is they're market orders to sell. And with that, you should expect the price to go down. But it did not. It actually went and it closed up. So that's very interesting. And as it went up, as it's not going down, that's when I start looking to the left. I'm looking, where is there a level somewhere in the left, somewhere here, where there has been plenty of selling, and straight away you can see it right here. These previous candles, see it right in the same place. Lots of selling here, lots of selling here, lots of selling here. So now I'm interested. Now I'm thinking, if there's more buying above this, with buyers overpowering these sellers, after the anomaly, it goes up, and we're getting volume above this area, and all the green volume, more buyers and sellers. Now I'm thinking, after the anomaly, there's been more buyers overpowering more recent sellers. So that's the confirmation I'm looking for. So over here is basically, these were patient buyers on the market. These were the limit orders they bought, and the market orders were unable to push through, created an anomaly, goes up. Then I want to see the aggression come in. I want to see the market buyers come in. And sure enough, on this candle, right about here, you started seeing them right away, right? And I think it was right about as this candle closed, somewhere I entered. So that was my entry right there, somewhere right about there. With the stop, I believe I looked at these buyers, these sellers down here, and I put it a little bit below them, gave it a little bit of room. So it was about there someplace, something like a very tight stop. So that was it. And the target is up there, still not reached. It's
why that target?
That target, because on the 30-minute chart here, I'll zoom this one out, and you go to the left, see where the price was, and where did it go? There we go. See this? Now we had this big spike when the war broke out about a month ago.
Yes.
Right? It started to spike, and so pretty obvious when that first spike happened, that was your first point of resistance. Then a consolidation, then that little spike above. So I picked that one, which if you look at it closely, very interesting again. It was resistance, consolidation, higher lows, good breakout, and it turned into support. Resistance and support, that's the key area. So that's why I have the target there.
Perfect.
Right, so just look to the left, and let's put it back on. It was zoom out. So I took this entry, I don't know, 6 hours, 8 hours ago, whenever. And if it goes, it's going to go, and I probably took 2 naps in between. And I don't even know, I've just been having a good day out. And let's see,
nice.
30 hours, 20 hours, 30 hours, something, whatever. If it goes, great.
Yeah. How big are you on this?
This is 7 contracts, so I'm still on the smaller side. So right now it's about 3,000 unrealized. But this is on something like $200 risk, 2 or 250, something like that. So it's the RVR that I'm really trying to nail down. And the fun is when you can consistently get these kinds of trades where 10R is considered, your average trade or your small trade. And then the zeros just kind of add up. If you, instead of risk $200, you risk $500. Suddenly, 10R and $500. Now, numbers really start to add up. And if I go back to my usual sizing, which you know what that is, that was typically in the $50,000 range, my risk per trade. You go 10R on that, well, that's quite all right.
No, that's amazing. That's amazing. Tell me, and I'm so sorry, I'm so basic with my question, but it's the first time someone explaining me something about this and me seeing this too. I mean, yesterday was the first time, to be honest. I saw before, but I never understood. And yesterday I was listening to you, so I didn't want to ask some basic question. So what is exactly a tick? Why you have 1,000 tick? What does that mean?
A tick is a transaction. So every time there's a transaction, the chart prints it, basically. And when there's 1,000 transactions, then the candle closes. So if you look at it, let's go to the 1 tick chart. So you can see every tick as it happens. And on
How long does it take to have 1,000 ticks?
Depends. Some charts move fast. Like this is moving decently fast right now. But actually, let's stay on the 1,000 tick. Let's go to something like the Russell 2000. And it's just not moving as fast. It may take 30 minutes for one candle to form, but let's say on something like the MNQ on the NASDAQ, every 3 minutes we'll have a new candle, for example.
Oh.
It really kind of shows you the pace of the market. But that's the fun part. It's not time-based. It's transaction-based.
Okay.
So you can choose the kind of tick chart you want. We're looking at a 1,000 tick chart here. If we zoom in and we go to a 100 tick chart, it'll start moving and closing candles a lot faster. And if we go, there's, I believe, the 1 tick chart here. There's 10. Let's look at the 1. This will be ultra fast. But it's so fast. You're seeing every transaction happen.
Yeah.
It doesn't even give you candles. It can't even print candles. It's kind of fun.
And you cannot take decision with that because it's so little.
Yeah.
For
Well,
me, it's
yes,
like flat. You know, you can see it's flat. That's it.
yeah, it's tricky. This is unnecessary, I think. But
Yeah.
yesterday I did take a trade on the 10-tick chart, only because it was ultra slow. The 1,000-tick chart was ultra slow, and that was, I think, on the Dow Jones. If I remember correctly, I think I took a long here or something like that. Anyways, and that was because the 1,000-tick chart was just not moving. It was like a screenshot. The 30-minute setup was good, but so I went into the 1,000-tick chart. I'm waiting and waiting and waiting. I didn't even see a single transaction. So I went to the smaller one, the 100. That was still too slow. So I went to the 10, and then I started to identify. Okay, here is where the anomaly is. Here the buyers are stepping up. They're overpowering the sellers, all that stuff. And I found an opportunity on that. So I'm not married to the 1,000-tick chart. I usually go to the 1,000-tick chart first. And if it's too slow, then I can zoom in to something else.
Yeah.
You know,
It's fascinating.
Yeah, it's a lot of fun, charts.
Yeah.
Now, again, I'm still also using the 30-minute chart here for the bigger picture setup and levels and all. But the only reason for that at the moment is because I don't have a 5 or a 10,000 tick chart, something huge. If I had that, I'd just pick up the ascending wedges and breakouts and retests all on the 10,000 tick chart, no problem. I just don't have that at the moment. But the 30 minutes fine. You've seen me use it for years, no big deal. Can easily work with it. Yeah, it's easy enough.
So you take the decision with the 30-minute chart, but you do take you enter on the 1,000 tick.
Yeah, so the 30-minute chart, exactly, for the setup, and then for the confirmation to put on the risk, I need to see it on the footprint tick chart. So it's not just a tick chart, I've got footprints on these charts as well as the footprint transactions. You can see every transaction as it happens. It's basically showing you order flow. See all these numbers coming in, buyers and sellers and all that. So that's the method I'm using basically. But I think the real trick is on the bigger time frame to begin with. The real big setup in let me show you exactly the setup I'm looking for. Oh, this is a good example actually. This is the Dow Jones, and the setup not to look for me, to stay away from, is this, where you're getting higher highs and lower lows. And it's just widening. This is excess volatility. You don't want to play with this. Here's happened again during the day yesterday. Okay, it was putting in higher highs and higher lows. Look at this, it was a mess. It didn't go anywhere. The setup I am looking for is this one. You can see where it's basically a flat bottom and then the lower highs. So a wedge, the price is compressing. And then the breakout from there. Once you get a breakout, then I want the retest. And when I get the retest, I'll look for the short. So when I start identifying a triangle, then I'm interested. That's when I'll go into it. So for now, I don't see anything here on the Dow Jones. I saw one here earlier, but it didn't quite pan out neatly, so I didn't play with it. But I'll show you, I think this one is where I took one and stopped out right here.
Yeah.
Where, again, you can see these, with these two candles, it was lower highs. And the bottom's flat. You can see it right there. Then sure enough, the breakout happened. And it went some way. It created a little distance here, a little room to the left. You know, when you're having a retest, I always like room to the left. That's from the naked trading stuff. It's right here. From the breakout to the retest, you don't want the candles chopping around in here. You want some gap. Because that's telling you the price doesn't like to be there. Every time it's there, it goes away from there. That's the whole point of room to the left. And then when it comes back for the retest, that's when I went into the footprint tick chart and found the entry somewhere here. Started to work, but took the stop out because it didn't go. The target on this was way down here, which again was based on previous levels, previous areas of chop and all that. So, you know, that's the setup I'm looking for. I've seen many good ones. The market is so abundant, it's ridiculous. Say over here, this was good. This was 2 days ago on the same thing on the MES. Again, flat top, higher lows. The breakout happened, but it never came close enough for the retest. So there was never a trade off of this triangle. But then a little later on, it did the same triangle, right? This triangle completed and broke out at 7:30 p.m. on this day. Then it came back and did the retest at 10:30 p.m., 3 hours later. By this point, it's about 8:30 in the morning for me. So I woke up probably in this area. Then I identified this and I was able to get long in over here with the pick charts and took it up to that level, that target right up there. So again, same as you saw the oil trade I'm in right now. The long was here with a very tight stop and a massive RVR. And the target there was based on, just zoom out a bit, right there. Just go to the left, obvious area of massive sellers. They went straight down from there. So that's the target. Sure enough, when I got long here, that's the place I'm going to hit the target.
Yeah.
So that's it.
Do you move your stop loss?
Yeah, I do. I don't move it away. Always move it closer. So
yeah,
always tighten it, never widen it, because if you widen it, basically adding the risk, which is that's not true.
Yeah, I mean, if you are already winning and it's going up, 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 then and you go to sleep, then because that's what I understood, right? You did this before going to sleep, and then you wake up at 8 a.m. It was there, or you
I wake up at 8 a.m. I put it on. I have breakfast. Then I go to sleep again. Then I wake up. I like taking naps. It's fun. It's different. No, but this is when I move the stop. Yeah, of course, I want the stop to be there, so I don't have to worry about it. Don't have to watch it. Don't have to do any of that. I can do whatever I want in my life. But the way I move the stop is once, let's say I take the entry and the stop's below it, for example, and I'm watching it go in my favor. And the time that I'm confident to move my stop is when it goes and it overcomes recent resistance, overhead resistance, which happens to be in this area, resistance, right? So it goes here, it's struggling in this resistance area, another indecision candle, and this one starts to go. So by the time the candle's in this area, that's when I'll confidently bring the stop in, and it's at break even. I won't move it beyond break even. I'll leave it at break even. And then if it wants to mess around all day until it gets the target, no problem. And I have no risk, but I'm giving myself a massive opportunity to go. What I don't do is trail the stop. If I trail it, I'll have a lot of trouble. I've done this before, trailing, that's basically works for a trend. But a lot of times it doesn't really work well. If you're trailing it, every candle or every time you're following a moving average as it goes, and then a little bit of volatility and you get stopped out. And you miss out on your 20, 30R plan. And you end up with 5R only. And what's the point of that,
Yeah.
So risk management is very important, of course. The first step of risk management, wait for an excellent setup. Like this is an ideal, perfect setup. So the setup is not to enter here. First thing, of course, you have the consolidation with the higher lows. Do not enter the breakout. Always enter only on the retest if you get the signal on the footprint chart, tick footprint chart. Then put on the risk and then let it run. And once it overcomes overhead resistance, then bring it to break even. So all of this is risk management. The price is up here. This has been in play for 10 hours. This thing has been setting up, waiting for entry, waiting for it to go over resistance, all that. It's taken about 10 hours. And only then you are risk-free. Then your job is done. Because now you have the stop, get risk-free, you have the target in place, the limit order's there, and that's it. It's either going to hit your stop and stop you out with no loss, or you make a lot of money.
Yeah.
And that's it. That's all I trade nowadays. That's all I want to trade. And I'm not going to sit here and watch it for 10 hours while it's doing all this. I'll come at, usually for me, about 8 in the morning, I'll start looking at it. If I see, oh, look, 3 hours ago, there was a wedge. So I'll draw it. And look, there was a breakout. Okay, I'll wait and see. I'll put an alert here, let it buzz at my phone, if it gets into this area. Then I'll come and look at it. So no rush. No need to look at it all the time. No need to get tied up into it. None of that nonsense. You can just sit and wait. And so this was a good one. Again, you can see this was a huge opportunity. And then we had this opportunity earlier, just didn't go, but it was there.
Maybe it goes now.
Yeah, let it go. I don't see a setup now. The setup was here.
Okay.
The breakout, the retest. This was the setup, and I did take it. And I did not move it to break even up to that at that point when it went back. And so I took the little stop. And really, it's worth it because look at this. The stop and the entry are right in this area, and the target's here. This would have been 20R. So it's worth taking the risk if you can put on 20R. It's not a big deal. You can do it 3 or 4 times. It's just that this gave me the setup only one time. That's why I didn't see a re-entry. Once it went back in, if you look at it over here, it went and then it came and stopped me out right here.
Yeah.
But it didn't just stop me out and then continue. It actually went back into this consolidation area. And that's messy. Now I don't trust it. I don't want to play with it. So I only got one opportunity here. A lot of times you'll see me enter 2 or 3 times. You can take a few attempts at it to get in. But here in this case, no, just once. It did not give me the other one, the setup I like. Maybe you'll do it here. Maybe you'll have another descending wedge here. And then you can take it from here down to the target. No big deal. If that happens, we'll see. I have no idea. So that's there. Let's look at the other one. This one is live.
Related to the one that you just showed me, the market right now, it's a little bit more, let's say, it's more volatile. The VIX right now, let me see, is around 27, which is huge. which made, and this is a question, right? Since it's more volatile, your stop needs to be wider, and maybe because of this volatility, there is much more choppiness. So my question is here, I do understand that you still maintain the same kind of stop, like let's say $200, or maybe depending on what it is, $500. But because of that, maybe it's already something wider, and maybe it's still the same trade, but because of the VIX is so high, the choppiness, it's part of that, and maybe it's still the same trade, or you didn't thought about that maybe, or it's just that doesn't work with what your strategy or what you are doing.
Yeah, I used to look at that, look at the VIX and decide on position size and volatile wide stops and all that. And I realized it didn't give me any additional benefit to have a wider stop because there's excess volatility. It just makes no sense. So, I mean, sometimes it works, sometimes it didn't. So it's not reliable. So what works for me, what I've discovered over so many years of trading, is that very simply watch the price action. Not the moving averages, not the level 2, not anything else, just pure price action, quite literally order flow. Watch the orders happen. Watch these candles form if you're doing naked trading, or if you're trading order flow like I am. Watch the transactions. Watch every single one of them. You know, you can see it right here, right now. It came down. There were lots of sellers, but apparently there were more buyers than sellers. That's why it went up on the order book. And you can see now there's more aggressive buyers right now, as in market orders. Let's see if these market orders are aggressive enough to go on. Otherwise, they have to go back into this liquidity zone and go down again. So I'm watching all this stuff. This is, trading the order flow, quite literally. This is interesting too, because just on the previous candle, you can see right there, lots of interest, right? Lots of volume. So there's a lot of liquidity right here, sitting on the order book. At first, the market sellers were more than the buyers. Now it seems like there's more market buyers than sellers. Let's see what happens. It's an interesting place, right? So this is more important than watching the VIX and volatility and all that. I mean, really, if you're chasing volatility, just go trade the New York Open and ORBs and all that nonsense, blow up accounts and all that stuff. I'd rather not do that. I don't even suggest anyone do that. But really, if you're watching price action, you'll know exactly where to put your stop, irrelevant of the circumstances. For example, I mean, I'll tell you now, we just had this huge news from the president giving us a speech on the Iran war and all this, right? Just last night, just like 10 hours ago, whatever that was.
Yeah.
And so that should create extra volatility, and so according to that, you should put a wider stop, but I did not. I got into this trade. The stop went right there. You can hardly even notice it on this chart. And this is a 30-yard, 20-yard thing, whatever it is, when it closes. So not a big deal. I'm not bothered. I'm watching price action. I'm watching it right down here where I noticed there was an anomaly. And then the buyers were aggressively taking over. I get all the confirmation I need, and I don't need to look at the VIX. I know exactly what's happening right here, right now. This is the point of interest. All these other correlations of the VIX is high, and so we got to be careful, or the S&P is going down, so we should trade oil long or whatever. Those correlations, I don't find them reliable. I never did. Or others have things like don't trade on Fridays, or don't trade on options expiry days, or whatever. I've tried those things and I haven't found any decent results. So I simply trade this and I get all the results I want. Very, very simple. So, I don't think you need to make it complicated. I think the fun part is really, you want to think of it this way, reverse engineer it. You want to catch a trend, right? In order to catch a big move, high RVR, you want to catch a trend. 20-yard, 30-yard trades. You're not going to get that trading in and out, scalping, volatility. You're not going to get that. You need to hold on to something. It's going to take hours to go. And so you want to get in on the beginning of the trend. And very simply, a trend begins after a breakout, which begins after a consolidation. And we're seeing that example right here. A consolidation, a breakout, then the trend began. Always. It's the same thing. Wyckoff has got so much information on this over the years. You've seen all that. And this is it. It's very, very simple. You want to catch a trend. So I'm always got an eye out for consolidation. There's basically two phases. It's consolidating or it's going. That's it. So after the consolidation, I'm waiting for the breakout, then I'm waiting for the retest. That's my signal that it may begin to go. So that's it. That's all I do now. That's all I'm looking for. And there's a monstrous amount of opportunities on this here. Let's look at, I was looking at gold earlier, and I think I saw plenty of
Gold was the mess yesterday. It went like down. It was like it was impressive. I thought about you. I said, I hope Abby took that trade.
I would have. I just didn't. I wasn't looking at it the right way. Or I don't know what I was doing. But look at this. This was a few days ago on gold, and this is a different kind of consolidation where it goes and it puts in this pennant, like lower highs and higher lows, right? The price is compressing it, but this is not the kind of consolidation I like. But basically a flag or a pennant, whatever you want to call it. Sure enough, it broke out and it went. It would have been a good one if you know how to enter these things. But I don't have good results trading this stuff, so I don't trade it. You can see the setup; it's right there. And I identified another one right here. Here we go. It came down, and sure enough, another pennant. Yeah, right here, overnight. And then it broke down from there. Retest that breakout area, and off you go. But I don't like these ones. I like it where one side, either the top or bottom, is flat. I like triangles. I don't like pennants. So I didn't touch it. But you can see there's tremendous amount of opportunities everywhere. And really, I was looking at it here when I drew this. Now, if I'm redrawing it right now, move that out of the way. And look at this. Now we're seeing.
Oh, yeah.
You see that? That's a bit of a flat bottom. You can see it keeps bouncing off of there. And then you have these.
Yes.
Yeah, you see these. This is a triangle right there. And then it really made a good, strong breakout. And the retest. Look at that. It happened. Yeah. I wasn't looking at the time I drew this, and I think I was, again, taking a nap. I don't know what I was doing.
Yeah.
It's fun to enter this area. And if you have a good RVR, you can take it. I don't know what that level's from. I have a level here. Why do I have it here? All right, there it is. Because it went up and it turned around. So I have that level right there. Interesting consolidation breakout from there. So that would have been a target. So if I was interested in this, if I was watching it and I saw all this in time, I would have been able to perhaps pick up an entry in this area based on the 1,000 tick footprint chart and go. Actually, you know what? Let's go look at that footprint chart. Perhaps it's we can see it. So I'll zoom out. This is a 10 tick chart, which is super fast. I'll make this chart. Very rarely I'll use it. Let's get into this one. 1,000 tick chart will give us more. Where is it? Where do we go? Here. This is our zone that we're interested in. So we have the breakout level right about there. And it comes back and you're in the breakout zone. At this point, we don't have a level here, right? We just have this whole area as a breakout zone. And you're looking for an anomaly. So you're beginning to see it right at the top over here. You can see lots of buying and it went down.
Yes.
There's an anomaly. Lots of buying, it went down. Then I'm looking to the left. I want to see where were the big buyers. I want to see a flat horizontal level of big buyers that the sellers need to overcome. I don't see anything up here. You just have to keep looking down, down, down. I think this is the first area I'd look at right here. They're kind of in the price. Lots of buyers here. So if the sellers overpower these buyers, then I'll get involved. And you can see they came down. They weren't able to go. They pushed up. And a little later on, let's see for what. There it is. Now we got interesting. You can see for the first time right here, there's lots of selling coming in below these big buyers, right?
Yeah.
That's my entry signal if I want to enter with the target now being there. But now, having all this in mind, where do you put your stop? Typically, to be conservative, I like the anomalies. You can see one right here, lots of buying, and the price came down. So if you're entering, where did I say, here, and your stop has to be here, you're not going to get a good risk to reward. This might be 2 to 1. Not a great one. So even with this perfect setup, I would not play with this. Just leave it alone. It's not there, you know. And wouldn't. Well, so far, it looks like it may go to the target, but the RVR is not there on this one. I identified this as my target.
Yeah.
So leave it alone. So even though the setup's there, again, if you're gonna risk $1 to make $2, you're not trading. Now you're another fraudster on the internet selling courses.
Yeah. Yeah. No, for sure. And at the same time, maybe you're gonna reach quickly, or maybe it's gonna go to your stop quickly because it's gonna be there over there, like a choppiness, let's say. Yeah.
This isn't worth it. This is just an absolute joke. I mean, RVR is so important. No matter how many hours you wait for the setup to be perfect, if the RVR is not there, you're not going to make money in the long term. You might have 1 or 2 winners, but then you'll have two losers and you're back to break even. Your third loser, now you're losing money, and then your psychology goes out the window. Now you're over trading. Now you're, all that stuff. It becomes a mess. That's where everyone gets destroyed.
Yeah. Do you always enter on the confirmation? So let's say it crossed the support level and it came back. That's when you enter?
Yeah.
Always? Yeah. You don't go, let's say, sometimes it happens that it doesn't go back to the same support level or resistance where it was. It was a support, but it crossed. So maybe it doesn't go to that area. Are you not taking the trade then?
Yeah, I won't take it. I'll let the breakout go. If it goes without me, it goes. So I'll show you. I think I saw
because in a certain way, that one that you were showing, gold, I think it was.
Yeah.
I mean, on the new triangle that you draw, in a certain way, it came back, but it didn't touch that.
Yeah, it didn't touch, and that's a good point. You see that breakout area, it's an area. And if you want to be more conservative with your trading, then just have your level, and if it touches the level, then you look at it. Otherwise, don't. You don't have to. You can be conservative if you're a little afraid of trading. No problem, you can do it. Me, I look at it as an area, as a zone. So it can come in, and look at this one, for example. I did take this one. This didn't just touch, it actually went through it.
Yeah.
It didn't bounce precisely, but it went through it. Now, would you be afraid to take it because it's no longer, it's a failed breakout because it's gone inside? You can argue that point.
Yeah.
For me, I treat this whole area as a retest area and then go. And if you look at this one, the reason I brought this chart up is look at this one. Here's your consolidation again. Here's the breakout. And it never came to retest. And it just went, right? It just went. So leave it alone. You don't touch it. You don't enter here, because if you have this trading style where you're trying to catch the breakouts, let's look at this now. You're identifying these higher lows, they're happening, and so as soon as the price starts to break out, you're entering, right? Now, there and there. You would have entered long here. Yeah. And you'd stop out, because next time, look at it, comes back in.
Yes.
All right, and a lot of times you'll take the stop out and it goes all the way down. It's very common. So I don't like to enter breakouts. The next candle you would have entered here, and this one would have worked. But in doing this, you'd end up taking more losses than necessary, truly. Now, this one here, again, as soon as it breaks out, you enter long here, right? And then maybe you would have stopped out, maybe not, depending on where your stop is. But personally, I'd rather wait for all this. I don't need to mess around with all this. I'll just wait for this, the retest. And then off you go. That's the party. That's the real party. Again, I'm in the live one now, and I'll show you again where it was a very simple kind of retest. See, if you're looking at this chart, where is it? If you're identifying this as the breakout area, and as soon as it goes up, you're trying to enter long, and it's a bit tricky, right? Then you have to also, first, don't forget, when you're entering breakouts or momentum situations, you're going to have a wide stop anyway, which then messes with your RVR. So that's another problem. And of course, again, you run the risk that it's a false breakout. False breakouts happen all the time. Yeah. So I waited for it, and this area is where I got involved. And as I identified the buyers taking over, firstly the patient buyers, then the aggressive buyers, then I'm getting in. And with that, super tight stops. And, you can just leave it alone. Mostly it's like this. It's not a big deal. No, man, let's get to that target. I should change the target, right? Make it up here to 120. There you go. Because that's the high. That's the high.
Are you going to move your target? Maybe it's going to go further. And you stop higher.
It could, but here's the fun part. This is something I don't like to do because I identified this target for a good reason. If you're zooming back to the left over here, right, resistance, support, key level. Now, if it wants to go through there, sure, it can go, and I won't be a part of it, or it can give me another setup, and I'll take it again and go from this level up to that next high, about 120 or so.
Because there is like an area over there, like around 117th. It's around that area. It's also like a resistance.
Yeah, this could be a tricky zone. So if you're going long from here, maybe you target this. If you can get 10R, seems difficult, but it's possible with the right kind of entry. Sure. But it's important to not be too greedy and also not be too conservative. You got to identify the technical area. Like this, to me, technically makes sense. Just because it's going doesn't mean it's going to go forever. Just put it on and leave it. And this is the fun part. If you're going to watch it, you're going to mess with it. You're going to take your profits too early. You're going to add in too aggressively. You're going to stop unnecessarily. That's why I don't like to watch it. And also, don't forget, if you're watching it, then you're missing out on life. I mean, look, it's sunset outside almost. And you can go outside and do something.
Yeah, that's true. That's true. Yeah.
So I wish I
Yeah.
looked at stuff. So
Yeah. Now I
these-
understand what you were saying yesterday. I
almost there.
like this kind of trade because I'm more precise with each time that where I enter.
Yeah, it's very simple, really. It's the setup is it's precise. The conviction is good because with these retests, you get a much better win rate than with just entering breakouts. You can stop out with breakouts all the time. So catching the retest, firstly, your win rate's higher. Secondly, you can put in a tighter stop once you know how to take those entries. And then there you go, RVR, you don't have to look at it. Once it goes and you can move it to break even, that's it. You don't look at it. And either it's going to hit the target or it's not. At this point, for example, it could come all the way back and stop me out of break even. No big deal. I didn't lose anything. I didn't even lose my time because I haven't been watching this for the last 8 hours. I didn't lose anything. I'll come back and look at something later after an hour after the open or something and see if there is something. Otherwise, come back next week and see something. The market is huge. There's opportunities everywhere. And even with this style, which I think is quite conservative, this style of trading, it's a 30-minute chart waiting for these big picture setups. I want these triangles and the retest, all that. Even with this, I'm finding perhaps 5 trades a day, which is quite a lot. 5 genuine trades. And within that, maybe 2 or 3 attempts on every one of them to get them to work. So that's still a lot of trading on what I consider a very conservative style of trading and a very slow pace of trading. But the reward side is 10R has become a bit of a average small kind of trade. The winners are 10R. Like this one is, I don't know what it's going to be once it's done. So I think it's good. Do it that way. And you don't need to, again, go get overexcited, trade the open, ORBs, VWAP, level 2, and all that nonsense. It's not necessary.
Yeah.
It's only like
So
people seeing stuff.
you find those 5 opportunities on those that you have marked there, almost micro with the red little flag.
Yeah, and actually mostly on the S&P and the MNQ, MES and MNQ. And recently oil a bit more. Like right now, this one's oil. Oil's in play for the last 1 month. And let's see, you have some on the NASDAQ, not on the Russell and Dow Jones, but I think like twice a week I might find something there. Okay. I think last week was the last time I traded gold, was 5-6 days ago. But the majority of it, just on the S&P and the MNQ, that's it, man. I don't think you need to look at too much else. Right now, these are moving. I haven't looked at crypto in a long time, but I do have it here. Long time, like 2 weeks, I think. Probably got 1 trade 2 weeks ago on it. That's it. So, I'm not messing around with it. I don't really care. But I think there's enough opportunity with this, with just these tickers. It's quite amazing. Every day, and it's just shocking because my idea when I was looking at this, I decided I don't want to be sitting watching it. I just want an alert to come to me when there may be a setup. And with that, I'm getting 5 alerts a day, which I figured should be like 5 alerts a week, But with this watch list, it's happening. So it's okay. We'll take them. No big deal. And now it's just a matter of sizing it up. Probably very soon I'll get going with the size. No big deal. Easy enough.
No, that's nice. Thank you. Thank you so much for explaining me and taking the time and seeing your amazing trade. What time did you enter the trade? What time was it? 2 a.m.
Yeah, around here, around 1:30, 2 a.m. Eastern. It's about 8 a.m. for me. After coffee, nothing before coffee in the morning.
Nice. Yeah. I was snoring.
Don't worry, there'll be another one for you in about an hour.
Yeah. I do trade a lot of the SPY, but I look a lot on the mini futures of the S&P and the NASDAQ futures. Also, I look just set up there to be taking the trade on the SPY. That's what I do.
Yeah.
But I love it. I'm gonna get into these too. I'm gonna be watching it at the same time that I'm doing the other trades. So just to get more familiarized.
Yeah, I think that's plenty. Again, looking at the MES, the micro, and the MNQ, the micro NASDAQ, there's enough. There's enough. You don't need much more. And I have all of these on the list here. I just put them on as I was exploring them, but I haven't even looked at them in a while now. All these futures, commodities, all that stuff.
Yeah, they don't
There's not much going on.
move so much, right? They don't move so much.
Yeah, they're mostly range bound and stuff. So you don't have to waste your time when you know, again, 80-20, right? Just focus on the thing that gives you results. Forget everything else.
So another question is related to, I heard that you're trading through, your chart are through TradingView. So, and TradingView, the volume, the amount of contracts, it's not accurate. That's what I've heard. Even though people assume the same thing, that is much better. Have you heard about that? What is your experience related with that?
The only difference between DAS and TradingView is that DAS is faster with executions. So if you're trading fast-paced, scalping the open, or doing the options kind of volume that I was doing last year, then you need that precise, really fast executions. And you really got to manage that risk. Again, I was hitting the liquidity on the options. That's why I needed it. I was really taking over the market there. But that's it. That's the only difference. I have no issues with the accuracy of the information here on TradingView that I'm getting. I have this premium subscription or whatever it's called, Ultimate or Premium or something on TradingView. And Ninja Trader is the broker I'm using at the moment, and no issues. DAS is, I think DAS is truly unnecessary for most people. For 99% of people on this planet, you don't need to get into a frenzy with DAS, because DAS is just that. It's for these degenerate people, basically, who just want to get in too fast and out too fast, and they're gambling and living on excitement more than actual trading. I don't think for most people that's not necessary. What you want to do is get into a position and leave it alone and get $10 for every $1 you risk. And to do that, you really need time on your hands, as in you want to give the opportunity for this thing to run for that 10-hour target. You're not going to sit here and watch it every second, take a partial and then add in and then another partial and all that stuff. You trade like that, you're never going to get 10R. Once in 3 months, you'll get a 5-hour trade and you'll be excited. The rest of it, you're just blowing it up. That's 99% of people. And DAS actually inspires that behavior with the way the platform is configured and set up and everything. So I actually don't recommend. I think the platform itself is very triggering. So no, you don't need it. I think it's simple stuff. You don't need anything more than TradingView, which is just a simple web browser-based thing. And there's an app which, I put this trade on my phone, by the way. I wasn't looking at it on the app. I just turned on the computer now. Well, my kid was using it earlier now.
But you put the levels on your phone too? No.
Yeah.
I don't know how to put levels on the phone, because I do use TradingView on my phone just to be looking on the chart, but to draw it.
Yeah, click and zoom.
What kind of phone do you have? You have a tree phone, like a triple, like three?
No, it's one of these Samsung things. It's a regular.
The same as me.
Yeah. That's it. So I don't know. I just click on it. There's a line. I can put the line where I want. It's like my daughter can do it like crayons.
Okay. Okay. Nice. Nice. Yeah. No, I love it. I love it. I also have the TradingView Pro, but I'm not sure about what I'm gonna ask you, because I'm not sure. I have IBKR, and I'm not sure if on TradingView, also as on a BKR, I needed to say which kind of information I did want, and depending on that, they charge me. And I'm telling you, like the New York information or the Chicago, I
don't know a lot about that stuff. We have other guys in our group who are much more knowledgeable on brokers and information. But to be very simple about it, I don't think you ever need to pay your broker for the information on the markets, especially with IB. You just need an IB account, right? And you link your IB account to TradingView, and with TradingView, then you select the package.
Okay.
For example, I want the charts and I want the footprint chart, so I got the package that offers that.
Yeah.
No big deal.
Yeah.
By the way, it's a lot cheaper than DAS as well. DAS is stupid expensive, unnecessary.
Yeah, I think, yeah. And I was paying. No, I don't know if I was paying. My husband is the one that, but maybe I was paying IBKR and DAS. And I
Nah,
said to my husband, I'm not using DAS so often, so let's take that out because I can do everything through only IBKR.
yeah. You can. I mean, but with IB, I wouldn't trust the free information that comes. It's delayed and all that. I used to put on options, spreads, and straddles and stuff. I still do it sometimes on the IB app, again on the phone. But you're not going to sit there and read candlesticks on something like IB. Again, TradingView is here. It's available. Start with the free version, upgrade to the version that makes sense to what you're looking for, and just link your broker when you're ready to go trade live. And your broker ID. Yeah. No big deal, and it's super easy. There's nothing to think about. I mean, people make a big fuss about all these sorts of things.
Yeah.
You don't need anything. I mean, really, again, you know me, I do everything on an 80-20 basis. Keep it really simple. You don't need all this. These are all free objects, and people will sell them to you. They'll make money out of getting you excited. That's the whole industry. You know, the trading industry is a joke. Everyone is a freaking retard. So,
yeah. By the way, your trade has that's a huge, big, long candle.
Yeah, look at this. It's going to pull back close to break even, and then it's going to hit the target. Watch.
Nice.
I'm not going to be here watching it. I'm going to go away.
Nice. I love it. I love it. Beautiful. It's beautiful.
Yeah, it's good fun. Good fun. Again, this is it. You really get to simplify. Trading has become so much easier now that I do this stuff, and I'm using futures and using TradingView and going on a 30-minute chart and just going much slower, looking for these massive setups, massive RVR. There's very few trades I ever take now, and there's very little time. There's no time actually that I have to stay online and I have to come online and watch the market. I don't have to ever. I'm on the golf course and I get a buzz on my phone and I look at it. I look at a chart like this and I can put it on. It's not too complicated. Most of my trades are like that now, and it's great. It's a good life, So
yeah. Thank you so much.
Yeah,
I love it. Thank you so much, Avi.
You were talking about the other day, and it's the same reason I got into trading as well. Is for freedom. I don't want to be stuck in a job working 8-10 hours a day. I want to be able to make money at will without having to be locked into or enslaved into some sort of work.
Yeah.
And so trading this way actually allows that. I don't have to show up at the New York Open and get excited. I don't have it's absolute freedom. I can be anywhere, just have a phone in my pocket when it buzzes, spend 5 minutes looking at it, and that's it. And it buzzes maybe 3 or 4 or 5 times a day. That's about it. So that's where you're meeting your goals. If you want to get into time freedom, financial freedom, it's all available. Just got to design your trading style around it.
Yeah, it's true. It's true. Oh, love it. Thank you. Thank you so much, Avi, for explaining me and taking the time and yeah.
No problem at all. It's good fun. It's all good fun. That's this.
So are you gonna go now having lunch?